one of corporate India's most respected business leaders and usually very reticent when it comes to interviews, which is why it's such a pleasure to be interviewing Mr. Kumar Mangalam Birla. Beautiful residence here in South Mumbai. Appreciate you taking the time and speaking to ET now, Mr. Birla. Thank you so much for this interview. It's been what, well over 20 years now since you took charge of the Aditya Birla Group. In fact, in a few months, it'll actually be 21 years. How do you look back at the journey so far? What, according to you, would be your 3 key high points?
It's been a very interesting journey, Sandeep, but very fulfilling both personally and professionally. I think I've grown as a person, hopefully as a professional as well. Lots of high points, some low points. But I think the fact that we've grown the group significantly 20 times over in the last 20 years, the fact that we've built very high quality businesses that have strong cash flows and huge sustaining capability for the next maybe 2 or 3 decades, the fact that we have a very robust talent and leadership pipeline in the system, I think these 3 are achievements that collectively we feel very proud and very satisfied about.
One of the most striking things for me, though, which you haven't alluded to, is the fact that you've done 36 acquisitions in 20 years. Almost half a dozen of them are overseas ones, some of them audacious ones, if I may use that word as well. So tell us, what drives a deal for you really?
So there's a single pointed agenda, which is value creation. So for example, in the case of Novelis, I wanted a presence in the downstream part of the aluminium business, whereas we have a presence in the upstream aluminium value chain. Just because whenever there is a commodity cycle, whenever there is a cyclical downturn, it's the end that is closest to the customer, which is the downstream part of it, which is the most insulated, which is what basically Novelis has done for Hindalco. In the case of the pulp acquisitions, for example, they were a critical raw material for our fiber business, which we have a presence in India and in Thailand and in Indonesia. So each acquisition, if I can say so, has been very carefully thought through and been quite purposeful, and most of them have worked very well for us.
Let us talk about the 36th one, the largest M&A deal this year, the Ultratech Jaypee transaction. In fact, this is your first interview after that deal got done. Why was this such a crucial deal for Ultratech?
Cement is a very critical and core business for us, as you would know. This is an interesting asset, fairly good quality. The most important aspect of this acquisition being that this acquisition actually gives us a presence in markets where we're completely non-present today, and that has been the overarching rationale behind making this acquisition.
But did the bid revision in a sense frustrate you? Why did you decide to up the bid, so to say? What led to that?
So some toing and froing, which is I think very common for a deal of this complexity and this size. There wasn't any revision in price as was reported in the media incorrectly. I think what happened was that some commercial terms got renegotiated, which again is part of the transaction dynamics of such a large transaction.
But you stuck with it because you felt there was inherent value in the transaction.
Absolutely. I think this will create value for our shareholders, not in the immediate term, but I believe in the short run for sure.
Is it fair to assume that you will now pause on cement acquisitions? Because the reason I ask this is because there are still a lot of distressed cement assets that are available. Would you pause on cement acquisitions, or would you look for them as well?
So this is a good time for us to pause, just because we've bitten off a large asset, and it's the right time to spend the next few years digesting this asset and starting to see a return from this asset. Before we start thinking of investments again.
You are by far now the largest cement player in the country with Ultratech. What sort of pricing power does this give Ultratech at all, in some of the key markets?
So if you know the cement industry, it's a very regional industry, and each region is almost self-contained.
Sure.
So you need one, even a small or a mid-sized player to be a good ant, like I say, and to bite the larger elephant. Which can completely upset the competitive dynamics
of the
and
market.
Of course the pricing table. So no pricing advantage that accrues on account of size.
Your current capacity, if I'm not wrong, is 91.2 million tons per annum post the Jaypee acquisition. Now that you're saying you won't look at the inorganic route, you would look at growing organically. What the market would love to hear from you is that when are you looking to hit that 100 million ton per annum mark? That's something that I'm sure you have your eyes set on as well.
100 million is actually a misnomer. So what we are looking at very clearly is the quality of earnings. I believe that this is a high quality asset, Ultratech as a whole by any measure globally. And the focus is on how do you drive returns out of this fairly large and complex set of assets.
We've seen a lot of consolidation in the cement industry, especially now since the MMDR Act got passed. Would you say that FY17 onwards, large players like Ultratech can sit back and reap the benefits of the capex spend that has happened over the last few years? And is cyclically, are we going to see an upturn now over the next 12 months?
So it's really a function of what happens to the Indian economy, because cement growth is a derivative of that.
Sure.
I believe that the economy is in for good times, which means that the cement industry should also see an upturn. And I believe we've made the right investments over the last 10 years for sure, in terms of the right capacities in the right places, and build the right competencies. So I think it's safe to assume that Ultratech should see some pretty smart returns in the next few years.
I have to talk about telecom business. There is a lot of talk of a new entrant into the market with Rel Jio looking to enter the market, and there is some amount of apprehension that it will be a disruptive, force, so to say. Are you anxious about the entry of Rel Jio?
So it's going to be extremely disruptive. I mean, that's a given. There's no two thoughts on that. Having said that, Idea is a survivor. If you look at Idea's track record, it's come up in the front right from being at the very back. It's been written off several times in the past. Having said that, it's built a huge and very deep customer franchise in its own mother markets for sure. And I actually believe that Idea will come out looking much stronger after the next few years, which I'm sure are going to be very turbulent.
Why do you say the next 2 years will be turbulent? Is it because of the increased competitive intensity with this new launch coming through, and you think it will take 2 years for things to settle down in the industry?
So you've got a large player like Jio entering the market with a large presence on the ground already in terms of a huge asset base, a player with very deep pockets, and it's bound to be disruptive. So I think for all of us incumbents, it's going to be a tough 2 years, but it will be exciting to see how it plays out.
You've already, Idea Cellular has already cut data tariffs, and I know you don't look at things at an operational level, but there is already some movement that's happened, and other players have also followed suit. Do we see more of that? Are we headed for a nasty price war in the near term?
So Himanshu is the right person to give you some of the nitty-gritty that you're looking for. Like I said, you've got a large player coming in with audacious ambitions, with a track record of performance, I think the fact that it will be disruptive is, like I said, a given, and we're going to see some very interesting times for the next 2 years for sure.
Of course, one more question, Idea, is that there are concerns on capacity. The fact that the established operators don't have the capacity to take on Rel Jio, which by virtue of having bid so aggressively has more spectrum capacity. Is that a concern, and would you look to ramp up capacity either through acquisitions or by buying spectrum from the government? Is that something that you're consciously looking at?
So it's fair to say that we have enough capacity, let's say, to serve the market for another 10 years. Jio probably has enough capacity to see expansion of its data usage by another 30-40 years. Having said that, there are gaps in our spectrums, some markets where we don't have spectrum, which we hope to fill in the next auction. Will we for sure? Can't say. It depends on how auction prices actually play out. And no one interesting in the market amongst incumbents who we would actually want to acquire.
But so you're saying you will not bid irrationally in this auction, like we saw in the case of 3G spectrum, which was a do-or-die auction where industry bid very irrationally, one will say, but that was a scarcity-induced auction. So you're saying you'll be responsible as a bidder in this auction. Is that a fair assumption?
So we have 80% of our existing markets covered in terms of having 4G spectrum for those markets. And I think you put it very appropriately. The idea is to bid, sensibly, and hope that we will cover those gaps. Having said that, there are some incumbents who have valuable assets, but no one who we would particularly like to acquire at this point in time.
What about capex intensity for idea? Because given the fact that the next 2 years are going to be turbulent, you'll need to acquire a fair amount of spectrum as well. Are we likely to see high capex for idea as a promoter of the group? Do you think you'd need to invest more in the telecom business in the next couple of years as well?
So we've seen large capex in the last few years, which has been on account of rolling out 3G as well as the 4G network. And I think you are probably seeing the tail of that will go on for the next few years, after which there should be a lull in the capex. And I think that's the point in time when we will start to see returns coming off of the investment of the last few years.
I want to shift focus and talk about the financial services business, because that's also been doing very well. Insurance industry is in focus now with the merger of two large players and with another large player looking at a listing as well. So the market would like to hear from you if you have any plans of listing your insurance arm. Is that something that's under consideration?
So what's top priority for us in our insurance business is really to ramp up distribution. And that could happen through tie-up with banks. As you know, we don't have a banking license and we don't have our own bank. Most players have the advantage of having a bank of their own. So no plans to list at the moment, focus on ramping up distribution.
Would you look at listing probably a financial services arm? Because one gets the feeling that that's developed a phenomenal amount of, you spoke about its size and scale as well, and it's almost become a financial conglomerate, a non-banking financial conglomerate, if I may use that word. So is that under consideration? Would you look to unlock value? Because you've done that with your, with the carbon black sale, ITITES business, fashion demerger. So you've done a lot of, value unlocking steps in that direction. So would you look at something in the financial services space?
Most definitely. I think we've built a very neat asset with some very high quality businesses. Like you said, it's a conglomerate of businesses in the financial services space. I think it's very reasonable to assume some sort of a monetization event. May not be an IPO. We still don't have clarity on that. But the fact is that we would like to unlock some value for the equity holders of ABFSG, which is the financial services arm of the group. Just because it's an interesting point in time, we've reached critical mass, and we could use the equity to fuel the next phase of growth.
But why would you say that IPO is not necessarily the route that you'd look at?
So again, it goes back to what monetization event gives us the maximum value. When I say us, I mean not just the promoters, but as importantly the other shareholders of ABNL. The fact is that we are not really pushed to the wall. We don't have a financial crunch because of which we need to do something in the next
3 months
2 months. And therefore we have the leeway of time.
But would you look at strategic investors or financial investors in such a case?
So we actually see ourselves as being a strategic investor.
Sure.
Having been in the business for more than 2 decades now. And if at all we bring in another investor from the outside, it would have to be a financial investor. So that's one of the options that one would look at.
But do you have a time frame at all? Could it happen this financial year, or is it likely to happen post that?
So like I was saying, Sandeep, no urgency for cash. We have a source of funding in the form of ABNL, of which the financial services business is a part. And I think we'll wait for the opportune time.
Let's talk about the commodity business as well, Mr. Birla. Global commodity cycle has seen a huge correction. But what's your sense on the upswing now that we are seeing over the last 3-4 months? Is this here to stay?
So the sense is that it makes you feel very happy because bottom lines should be looking better, at least for the next few quarters, if not more. Having said that, in the last few years, you've seen what we call the financialization of commodities. So a huge amount of speculative money that goes in and out of commodities, which makes forecasting commodity prices almost an impossibility. So we really have to wait and see how it plays out. So many macro factors globally that come into play. Difficult to say whether this upswing is here to stay and if at all for how long.
Is a concern also the fact that we haven't, the rally that we've seen in commodity prices hasn't necessarily been matched by commensurate demand for commodities in markets like China, which is still sitting on excess capacity. Is that an equal concern?
The big concern is China, because China is, of course, the big elephant in the room. Huge overcapacity, dumping by China. Concern not just for India, but for players globally. Remains to be seen what we can do to actually stem some of the losses on account of that.
Your main commodity business, Hindalco, of course, is now, one will have to say, flavor of the market, so to say. The stock price hit a 52-week high recently as well. And the sense that one gets is that the major capex for your metal business is behind as well. And will improved cash flows now lead to some amount of balance sheet deleveraging? Because that was one of the concerns several quarters back. Do you see that happening, improved cash flows now coming through?
Very much so. So we've seen very large capex in the last few years. That was something that was planned. So when we thought about the capex 7-8 years ago, we planned to have this large capex that would take Hindalco to the next league in the global ranking table in terms of being a metals conglomerate. And the plan even then was to delever the balance sheet after the completion of this capex program, which is the phase that we are in just now.
Novelis, your prized acquisition, probably one of the success stories, so to say, is on very strong footing as well, with volume visibility being seen as well. And we saw stellar performance in the last quarter as well. So this $1 billion EBITDA expectation now is again revived. But tell us, given the way the global economy is, given the way US economy is, and of course concerns in Europe post-Brexit, what are your ambitions for Novelis, Mr. Birla?
Novelis is again at a very interesting phase of the evolution of the aluminium business. So aluminium is seen as the material for the future, especially, let's say, for the auto industry, which is looking to lightweight and meet the new emission norms that have been set for it. So huge churn in terms of the product portfolio, much more technologically challenging, but which is something that Novelis has a huge strength in technology. And I think the fact that it has consolidated its global position almost in every market across the world gives it huge sustaining power and huge strength as the largest aluminium rolling company globally.
That $1 billion EBITDA target, are you on track to achieving that in FY17?
So that's something that we put out in the public domain. Q1 has looked very good. If you multiply that by 4, then we should do better than 1 billion. But I think we are very safe to say that an EBITDA of $1 billion is something that Novelis is set to achieve.
Great. I want to shift focus and talk about the e-commerce and the e-tail business. You made a big splash there with ABOF recently as well. But I want to understand the strategic intent now. Are you looking at all this just as a distribution channel for some of your retail products, or is there a strategic intent to be invested in the e-commerce business? What's your thinking on e-commerce?
So it's been a very interesting experience. It's a world like no other in terms of any of the other businesses that we've run. Having said that, it's a business that requires a very long run. Returns are uncertain and a long time to come. We see this as an interesting distribution channel, not something that we would throw billions of dollars, forget billions of dollars, even millions of dollars after necessarily. So we want to be in the space and grow cautiously, and we'll have to see how it evolves.
Does that mean you won't be looking at the inorganic route to grow in this space for sure?
Not really. I think ABOF has done a splendid job. If you see in the last 7 months that they've been around, they are already a mid-sized player in the fashion segment. So no plans, no need for inorganic growth. They're pretty much set to see some healthy growth organically.
You've seen many boom and bust cycles. What do you make of startup valuations? I mean, is this sort of unbridled euphoria that we're seeing a bit misplaced according to you?
So I'd say that it's horses for the courses. Little difficult to paint everyone with the same brush. Depends on which sector and more importantly on which company. But if you look at it at a very broad level, I think some of the valuations are not sustainable, just given the fact that returns are much slower than I think most people expected them to be. And I think some of them are actually under threat of their sources of capital turning off the taps. So yes, I think that there is some amount of coming off of valuation that you would probably see.
And is that one of the reasons why you're also going to be very cautious as you approach this sector?
So our intent really is with ABOF to be in an important distribution segment, since we are the largest player in the fashion retail business in the country. And there is really no reason for us to be in a great tearing hurry to grow that business.
What next for the Birla Group? Because one keeps hearing about other potential avenues. First, I want to understand strategically what are businesses that you definitely don't want to get into, and what is the criteria that you sort of apply as you choose to diversify from here on.
So no need to diversify just now. No plans to do that, because in almost every business that we are in, Sandeep, it so happens that we are in a position to play the role of consolidator. Just the industry landscape of most of the segments that we are in seems to be set up that way. Having said that, if one were to theoretically look at diversification, it would be on the criteria of value creation. It would be on the criteria of, can we really be a substantial player in this new segment in the foreseeable future? Those are the two matrices that we would normally use to make a decision to foray into a new sector.
And you'd want to stay away from regulated sectors as well?
Absolutely. So that's been a track record with us. We got out of the power sector almost 2 decades ago, because we believed that it was a highly regulated sector and not one where we could script our own fortune. So regulated sectors is something that we've stayed a very far distance from.
What about defense? Because that's a sector that seems to have caught the fancy of a lot of large industrial groups as well, and there is a lot of policy action that we're seeing in the defense. It's seen as a clear thrust area of this government as well. Would you consider the defense sector as for a potential diversification?
So studying it, not sure if we would actually make a foray. We're trying to get a holistic view of the sector, what it takes to succeed in the sector, the kind of partnership that we would need to have, and what we and a potential partner would bring to the table. And is there a sustainable reason for us to be in a partnership and to actually be in a business which, frankly, we know very little of at this point in time. So something that we're still looking at.
So what looks exciting to you? I mean, the fact that you're studying it is in itself interesting, and the fact that you're saying you're looking at doing it in partnership, because obviously they'll bring the domain expertise. What looks exciting in the defense space?
So the fact that it's a growing sector, the fact that India is seeking to be self-reliant in the defense space, also that the government is putting a huge thrust in terms of private participation in the sector. Having said that, we've been known to be cautious and take calibrated but very long-term views of the industries that we are in. So studying the sector, jury is still out. We're still to put our arms around it and figure it out completely.
How far away are you from being in a position where you can take a decision on whether or not you want to invest in this sector?
Safe to say in the next few months we take a call, which means we would decide on whether or not we want to be in the sector, which means that we would want to take a call on which part of the sector and the kind of partnership that we would want to pursue.
I want to talk about global issues as well, and I know you believe Brexit is not such a big make or break event as, say, the media made it out to be. But I want to talk about the larger fallout, Mr. Birla. Do you believe we're increasingly moving towards a more inward-looking sort of protectionist, regimes around the world? Wherever you look at, do you think that's the trend increasingly?
I agree with that. In fact, if you look across the board, it's the developing countries that are more prolific in putting up barriers. Both tariff and non-tariff barriers. So I would say that we are seeing an increasing trend of nationalism. To what extent it would go is something that one would have to wait and watch. I'm not an economist, so difficult for me to talk about that. But it's interesting. There is a certain amount of rollback in the whole phenomenon of globalization that we've seen in the last 2 decades.
But does an increase in anti-globalization, so to say, change how you do business as well? Because you are increasingly in, significant parts of your business have global exposure, and you are an Indian MNC, if one may say so. So are you looking to rework strategy to cope with the new normal, or is it too early to do that?
Too early to say. We'll have to actually see how things pan out. But my sense is that we would remain an international player, so a business house that's interested in growing not just in India but also across the globe.
Mr. Birla, we're also talking at a time when the government has just completed 2 years, a few months back, it just completed 2 years in office. How do you assess the pace of reforms? Because we get a lot of mixed reviews. On one hand, we had the IMF say just the other day that the pace of reforms has been a bit disappointing. Do you believe that we've seen enough of the so-called Big Bang reforms, or do you think what we've seen is creative incrementalism?
So I don't think we require Big Bang reforms. I think what we require is that specific issues that are holding back the economies are actually, unclogged, which is what this government is doing. So if you look at increased transparency in allocation of resources or financial inclusion, economic diplomacy, of course, is at an all-time high. So it's about fixing the areas where the shoe pinches, and if that's called
Creative
incrementalism, then I think that's the thing that they're doing.
If that be the case, Mr. Birla, then why is it that we haven't seen large corporates invest? I understand that we still are, corporate India is still sitting on excess capacity, but even then we've seen very little intent of investment as well. What explains that?
So most corporates and corporate groups have a large amount of debt on their balance sheets because of issues, again going back to project delays and environment and land clearances not coming through. And I think that with that kind of debt, the mind frame would be more to delever as opposed to making new investments on the ground.
So would you say that a turnaround in the investment cycle is still 6 months away, 12 months away, 18 months away? How much time do you think it will take for that to kickstart?
Once you see the government spending on infrastructure, which has started to happen, especially in the roads and highway sectors, you're bound to see the impact of that in terms of a cascading demand cycle kicking off. And one can hope to see that happening soon, I believe.
So would it still be another 12 months away? Or maybe
so I
more?
think it would be safe to say that it would take 12 to 18 months before we can actually see the full-blown impact of that actually playing up.
What about interest rates? Because many believe that interest rates have held back investment, but I find it hard to believe that an additional 50 basis points interest rates would have actually led to more investment. What is your own view? Has the RBI been slow in cutting rates, and even if it has been, has it had a significant impact at all?
So I agree with you. I think whilst speaking from a business point of view, maybe rates could have come down a little earlier. I don't think they would have actually impacted the capex cycle at all. The real issue is about large debt that people are carrying on their balance sheets. And like I said, I think the focus is to delever as opposed to making spends on capex.
I do want to ask you about the bank cleanup drive, because you've supported it, even though a lot of industrialists and a lot of corporates have said that the RBI has been very hard on the banking system and it's taken people by surprise. But you've supported this cleanup and the timeline with which it's happened.
So it's been an issue that all of us have been aware of, and I always believe that it's good to face problems and stare them in the face and get them resolved, rather than push them under the carpet. I think this is something that probably will stand India in very good stead going forward.
I also want to speak about the relationship between corporate India and the government, because you are one of the tallest leaders of India Inc. And it was at an all-time low in the run-up to this election, 2012, 2014, and everyone, including you yourself, spoke out against the policy paralysis that we saw, institutional overreach, judicial overreach, and whatnot. Has that been fixed, do you think, 2 years into the term of this government? Where are we on that?
I believe so. I think that that sort of uneasy equation is now a thing of the past. This government clearly, like I said, is focusing on transparency, on ease of doing business, and has been very even-handed across business sectors. So I think that that is something that is a huge positive for the corporate sector as a whole.
Does it also mean that the influence of big business and policy making has come down, and is that something that you'd welcome?
So like I said, the government, I think, is focused on transparency, on sort of, being driven by the merit of the cause of an industry or otherwise, which is always a welcome thing.
Sure. I want to talk about the legislative logjam as well, Mr. Birla, because that's one of the reasons why many believe we're not able to realize the full potential of the economy. Do you think that as a result of the legislative logjam, the government hasn't been able to do justice to its political capital? And is it disappointing from an industry point of view that we're still not able to pass through key legislations because of this, deadlock in the parliament?
So I assume you're talking about GST.
Sure.
And as you know, GST has an inbuilt provision that would make tax compliance a little more easy, and any kind of tax reform would obviously lead to more ease of doing business. So I would hope that in the coming session of Parliament, like we all are hoping, something will come through on GST.
But is the delay exasperating at one level, because we've been speaking about it for years now with very little movement? I know I'm not going to ask you to predict if it's going to get cleared this session, because no one can, but is it going to be a game changer for industry, and is the delay exasperating at one level?
So if the economists are to be believed, the growth in GDP could be higher by as much as a percentage, 1%, and which is I think significant. In terms of, like I said, ease of doing business, it would definitely facilitate that, which in itself is a huge impetus for industry.
What about FDI reforms, Mr. Birla? We've seen this government take a series of steps on that. Do you think there's more that needs to be done, or are you happy with what we've seen so far in terms of opening up the economy is concerned over the last 2 years?
So this government has done well, I think, on opening up FDI in certain sectors, and which has in turn led to very positive FII sentiment. Which again is a very good thing for the economy and for corporate India in particular.
I want to talk about growth, because while on the while in the face of it we're growing at 7.5% as an economy, but if you talk to a man on the street, he doesn't feel like we're growing at 7.5%. As one of India's leading corporates, do you believe? Does it feel like we're growing at 7.5%? Is that the sense that you get?
So if I see numbers for Q1 across our businesses, Sandeep, I see growth of anywhere between 6 to 8% across the sectors, which makes me want to believe that the trickle-down effect will be felt by the man on the street in the months to come.
Mr. Birla, enough of talk on business and macro and all that. I want to talk on a lighter note. At the Times Lit Fest, you did speak about the fact that how you were not keen to do a CA, and you were scared to tell your father that you didn't want to do a chartered accountancy degree. And then, of course, in retrospect, you think it was a great thing that you did. Given that context, how easy was it for you to allow your children to pursue their dreams and their ambitions, because they clearly have very diverse interests that that you may not have thought of to start with? So how tough was it for allow them to pursue their interests?
So it's a whole new world that has sort of emerged in the last one generation. I think this generation is very, very different in many ways from ours. It was initially a little tough because one has seen a very different equation that we have shared with our parents, and I think that's true of my generation. And the whole dynamics of the parent-children relationship is pretty different now. But I think it's important to give your children wings, and very important that they be led to follow their passions and pursue their dreams.
But were you taken by surprise when your son came and told you that he wanted to be a cricketer? I mean, who would have thought that Kumar Mangalam Birla's son would want to be a cricketer, and that you'd actually encourage him and actively, push him in that direction?
So like I said, this is that time when they can go out and pursue their passions and follow their dreams. And what my wife and I believe is that it's important for the children to be happy. From my point of view, it's also very important at this age that they inculcate a culture of working hard. And when I see my son, I can see the complete commitment he brings to what he's doing. And I think that, in a sense, is the most important thing at this phase of his life.
But what about the next generation getting into business? Do they actively, at what stage do you see them getting more actively involved in your businesses? Are they interested at all? Is it something that you look
So very keenly interested because they keep asking all kinds of interesting questions about the business world in general and about our businesses in particular. My daughter runs her own microfinance startup, which I think she's doing with a great sense of purpose and with providing very effective leadership at a very young age. So yes, I see them both coming into the world of business and joining us at the group. One has to wait and see when that happens.
But it's not something in the immediate horizon, and you're very young at 49. I mean, you don't even need to think about something called succession planning, which much of corporate India needs to do about. But it's something that you say.
That's the last thing on my agenda.
Absolutely.
Just now, on my mind.
Rightly so. Rightly
lots of other
so.
things to be.
Sure, but I have to end this interview by asking you, what are dinner table conversations like? Since we're doing this interview at a beautiful house here in South Mumbai, what are dinner table conversations like with your kids? Is it all about Hindalco and idea, or is it, since you say they don't quiz you on your business, or is it about cricket and Bollywood? Both interest you as well?
So it's a very interesting potpourri of issues, very eclectic conversations. Could be about Pokemon, could be about technology, of course, always takes a lion's share, because I always am asking questions about how I can get up to speed faster digitally. But these kids are very bright. They have a mind of their own. They want to give back and help to build India, and which is a very heartening thing to see.
But Pokemon, I mean, it's fascinating to see an industry leader of your stature even being interested in Pokemon. But do things like that excite you as well, to see what young India, what the millennials are really getting hooked on to, and how the country is changing?
That's the new India. I mean, that's the India of today, and this is the generation that will shape the India of tomorrow, both from a social point of view and most definitely from a business point of view as well. So it's extremely relevant for us to stay in touch.
I have to ask you this, since you were a CEO as well at 28, you took charge of a huge conglomerate at 28, so probably your business challenges were very different from your daughter, who at a much younger stage is running her own microfinance firm, startup. How different were the two of you? How were you at 26, 28 versus your daughter now, in terms of your management styles? Do you see any similarities at all, or do you think she's very different in her approach, given her exposure as well?
So like I said, it's a very different generation. I see that they're very passionate, very driven, very focused.
I'm sure so were you.
I think that's the time to execution from the time that they conceive a project is much, much faster. They seem to operate in gangs, so they'll come together, do a project, and then kind of, sort of disband and come together again for another project with a different group of people. So very different way of working, and quite energizing to see them work.
It's wonderful to hear that, Mr. Birla, and such a pleasure speaking to you. It's wonderful chatting to you. You were candid, upfront as always. Really appreciate you for doing this interview with us here at ET Now. Thank you so much.
Sandeep.
Thank you.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.